on GBP USD, and I'll be using this for my little explanation for you to understand how to identify the ICT structural break and structural highs and lows on the break of structure. Then maybe later I'll prepare a video to identify the valid order blocks, and also adding it with a whole technique which I've been using in the past. And so what I normally do is this. uh well, always look from the larger time frame, which is um the main concept behind trading, to know the direction of the market, to know the direction of the trend. So we'll look at the larger time frame to identify the structure of the time frame, and from this time frame, I will be taking this from here. I'll be taking this from here, and okay, I'm taking this from here. So let's see this from this point, and I'll be taking it down. From here we have a high and we have a low, then another high and a low. And most times people find it complicated to know the structural highs and structural lows, but there's something I discovered before every strategy that have been existing. What people have been trading before the candlestick came into existence, and what they normally do is that they trade the line charts. So with the line chart, you'll be able to identify the main structure of the time frame. It's easy as that. It's easy as that. So let me show you something quickly. I know we're in the daily time frame, and all market move in respect to the daily time frame. From the larger time frame, sorry to say, from monthly, weekly, daily, 4 hours, down to the micro time of the chart, down to the 1 minute, and those are traded seconds also. So we have a high here, a low here, and I believe we call this most of us will call this a structural break of structure at this point. And here also price also break structure. But I want to show you guys something, how I really identify the structural break and structural lows in a time frame, so that I can filter the noise from the market. I go to the line chart, and what I see is this. I see price giving me the true structure. Forget about the giving me the true structure of the time frame, which we have a structure here. This is, let me call this the high, and this is the low, and this is a high also. But now watch this. This high here is okay. Let me get this, and let me get this. Let me get this. Okay. Take it to the right. So I'm using that, and make my line a bit thick. I think this should be okay. Better off. We have a low, and we have the high. Let me take this as the high, because I'm starting from this line here. So a high and low, and we have a break of structure at this point. Yeah, there's a break of structure, because this is a structural highs and lows. But now notice that this side of the market have not shown yet. So what you should be expecting is that uh, since price has broken structure to the downside, you should be looking for every reason to sell the market, which I'm not going to be talking about entrance for now. I'm just going to be showing you the raw skeletal work of the ICT structures, which I have been using for the past few months now. And then I'm anticipating to sell this price. So currently price, it's not giving us what it is going to do, but we'll look for every reason with maybe order block and mitigation blocks and all that to sell this pair. So when we sell the pair, this becomes a structure low because we have the head and the tail, which it has formed already. So we can't identify this yet until it breaks a structure. So when this breaks the structure to the downside, that's ICT break a structure, that's what I called it. So it's always work, when it has broken structure to the downside, then this place is recognized as a significant high. That is when we recognize this as a high, and price breaks to the downside, then we'll wait for price to put up back, and we'll be looking for every reasons to sell. Note, this is not a strategy, but it's not a strategy that tells you an entry, gives you an entry, but it gives you the framework of what you should see before anticipating the moves of the market. You understand? So price came back to this point, it broke a high here. It broke this high here. It broke this high here, and it traded through the downside. And when price broke through the side, there's a break of structure here. So what we'll be looking for, we'll be looking for entrance, every condition to buy this market. That's what we'll be looking for. You understand? We'll be looking for every single entry, fair value gaps and the rest, and look for a buy bias on this pair. Though you can see it falling down, I know that's what you see, but actually price has not yet moved to this point because you're starting from here, so we are seeing it from this point, this angle. So there's a break of structure because of the valid structural high here and structural low, so there's a break. So what we're anticipating, we'll be looking for every condition to buy this pair. That is how you remain profitable in the market. So when price breaks to the high side, you wait for price to come back down to create a higher a lower high, sorry to say a higher low, so you can look for buy entrance, buy bias, buy entrance to be on the buy side of this pair. We are starting from that side, remember. So we'll look to the side, and maybe we have an order block here because I know there should be an order block here. or something, every reason to buy this pair from this point. Let me go to them. Yeah, you can see that. You can see that. This is how I've been identifying my structures. This is how I've been identifying my structures. You always look at the wick when you're taking your stop losses and other reasons, but yeah, we are not talking about that here. We are talking about the value structural highs and lows. So let's go straight to the line graph again. Let's keep on identifying structures. So price gave us a high at this point. So what we should be anticipating is that price should pull back up and take out those highs. But I know that was in a smaller time frame, the candle charts with ICT, you're going to see this would be a premium for the sell side, for the sell side to look for entrance. But let's leave that aside. I'm talking about entering techniques here. I'm talking about the structures, how to identify the structures, and how I've been identifying the structures. So price came down here. There was no break of structure here. You can see that. This now gave us an equal lows. As equal lows is formed here. An equal lows is formed there. We anticipate price to get to this path, so we are still on the buy side. Stay on the buy side, looking for buyers. So if you buy this market here, fine, it's valid. Get here, you sell, you buy it and sell at premium, and price failed to take out this highs here. Then price started returning back, and there's an equal lows under this point. What is below equal lows from ICT works? Sell stop. The sell stop below here, which we anticipate price to take it out. Now, price taking out this equal lows here has formed something that is very, very significant that you should take note of. When price took out this equal lows here, something occurred, which is a break of structure. This one also would have the structural highs and low. Sorry to say, this one's not significant yet because it didn't give us a highs which we are anticipating, so it's not valid. I can call this a valid structural highs and lows. So price took out this lows, which is a low here, which is a low there. This one is not also significant. We need price to take out this one before the legs here will be significant, but it fails to take it, so we are still working with the structure here. So when price fell to take out this highs and fall to the downside, which led to the break of structure, from this point we are looking at this one, not this. So it took out the lows at this point, so I'll identify this. This is the high that brought the break of structure here. this is the high, the brother break of structure, sorry. Late to the break of structure, so we are in the downtrend on the price tick at this high here. On the price tick at this high, we are not in the downtrend, so we'll continue we are not in an uptrend, so we'll continue the downside. We'll keep looking for sell opportunities because this was the valid structure or a low here, and this was a structural high, and price failed to take it out from this point, so it fell down and broke the structure. So we are still looking for sell opportunities. So this point is the structural highs, so we'll be looking for selling opportunities since price have taken out this lows here. This is a valid low, so our structures remain from this point to this point. This is a structural low. And so the price take out this one here, not this one. This one is not significant because it didn't take out this one. The price take out these highs. We are not looking for bullish trend. You can still see that in the smaller time frame. Also, you can still see that in the smaller time frame. I'm working with the daily time frame, so you can get a clear picture, because I want to make this video short, not too long. And then you look for every entering reasons to sell the pair, looking for selling opportunities, and you short this pair, and we have a led to a break of structure at this point. Led to a break of structure at this point. Then since the break of structure has occurred, that makes this one becomes a valid high. So the valid high is not longer at this point there, so it's now at this point because of this that has been taken out. So we keep on looking for the structural highs. When price has broken structure, we look for reasons to buy the pair. So this occurs at this point. We have a structure at this point. I have a structure at this point. Okay, price broke structures here, and break of structure here. To make this one very quick, and this is it. Then we are out of it. We are broken down, and here becomes a structural high. Talking about the daily time frame now. If you go to your smaller time frame, you see all these things playing out. You keep on playing out bit by bit. That's the high. Then price took this out also, and it gave us a low. So with this, I think if we go to the smaller time frame, like a 4 hours time frame, you can also see that unfolding. Yeah, a smaller time frame shows a break of structures also, but you should know something, that when you're depending on the kind of trader you are, That's what's determine the time frame at which you look for your structural highs and low to determine where to buy or sell. Position traders will always be at the monthly, weekly, and daily time frame. Then day traders are in the 4 hours most times, looking for their structural highs and structural lows. And let me show you this in the smaller time frame, so you can see same thing also plays out in the smaller time frame. So what I normally do is this. Okay, let me take it from this point. I don't really use the candles because I need to avoid fake out and false break of structure. I need to avoid that. I really need to avoid that. So you can see the same thing unfolding, still playing out. Equal highs at this point. What is above equal highs, buy stop. Always have that at the back of your mind. If I go to the line chart or candlestick, you're going to see the price. Some are breaking structures there. Are you seeing it? But actually, it's not a break of structure. You can see that clearly. So there's buy stop resting here. So we'll look for every reason to buy the market because liquidity is lying above those points. And price definitely went there, took out stop losses. And when it takes out the stop losses, that led to a break of structure. You can see that playing bit by bit. It's unfolding out bit by bit. And here we go. Price broke structures. Every time frame has its valid structure that you should take note of, because today I'm going to be looking at this also. So guys, I'm going to be dropping other content, but that is how I do identify my structural highs and lows. So thank you guys, stay tuned.